We're talking to Jason Henneberry, and you can find him on most social networks by going to at Jason Henneberry. I'm going to have his Instagram as a clickable link in the show notes, but really appreciate your time here, Jason. We're going to be covering quite a bit of ground here today as Jason has one of the largest mortgage brokerages in Canada. So really appreciate your time.
Few balls in the air. Thanks for having me on the show.
So let's start with, you mentioned that one thing you're working on is a kind of a project that's turning into a business. You got three businesses going on right now, possibly now this fourth. Is that the trend? You kind of find things to fill a need, and next thing you know, hey, maybe I can make a business out of this.
Yeah, a bit of a mad scientist that way, or ADHD. I'm not sure what it is, but I do tend to take on new projects. My core business is in mortgage financing. We have a large national mortgage brokerage. We fund about $5 billion worth of mortgages across Canada every year. We have about 70 offices across the different provinces, maybe 550 people in our network. And that's the main business. And that keeps me really quite busy. But I sort of explore my creative side on the marketing side of things. And so I help a lot of them with marketing training, coaching, how to develop referral partnerships, all that kind of stuff. And so that's just led itself to creating other ventures, because inevitably where the rubber hits the road is on execution. You can have the best ideas in the world, but people need help implementing them. So the main business is called Tango. That's the brokerage. And then I have a coaching group that has evolved from that called Strategy Hub, where we've got about 600 coaching members, mortgage brokers, realtors, financial planners. They end up saying, hey, I like this, but could you do it for me? And so that's where the other projects sort of kick in, is we have sort of some SaaS software tools, marketing tools, and things like that people can plug into, where we just do these things for them that we're coaching them how to do. So yeah, it's sort of like one step in front of the other. And before you know it, you've got more than one thing that you're working on.
Sure. Well, that sounds really interesting. So let's start with the mortgage piece of it.
Sure.
I was in banking to a certain extent for quite a while, but it seemed like everybody that falls into some of these professions is kind of accidental. How did you find your way into that?
Oh, for sure. So I graduated university with a BCom commerce degree. Couldn't really find any work, pretty common story. This is back in like 2002. So I ended up working for a bank. So same background as you, and just really as a personal banker, almost like a glorified teller, opening bank accounts and issuing credit cards and that kind of thing. I started gravitating towards the mortgage financing side of things, but I was trying to find a way to move up in my career. So I did that for a couple of years, and I couldn't get anybody to pay attention to me. And so, I couldn't get a raise, couldn't get another job. I probably applied at one point, I think I applied at over 100 different companies. I couldn't get a call back. But then one day I realized I'm pretty good at this mortgage thing. I made the leap to being a mortgage broker, essentially, which was a complete departure. I thought I needed to have a career in an institution, and I became self-employed. And there's a whole story around that. But that was the moment where things started to open up for me. And that was 2003, 2004. And I've never looked back. My background is I just started plugging away as a solo entrepreneur. And then you get busy, and then you hire an assistant, and then all of a sudden you need a second assistant, and you start building processes around the team and all that kind of stuff. And like I said before, one thing leads to the other. And we found ourselves, here 20 years later, and we've got a pretty big brokerage and a bunch of people that we support. So grateful for that. That's sort of the trajectory.
Sure. Do you offer any kind of mortgage or financing for real estate investors who are trying to buy
Oh,
properties for?
oh yeah, we do all kinds of things in the company, mortgage financing for first-time homebuyers, all the way to really seasoned real estate investors who are doing, owning large portfolios or fix and flips, that kind of thing. Like, yeah, there's quite a varied variety of financing that we do.
So the first time homebuyer thing is particularly interesting because in the United States, we can actually acquire up to a four unit under the single as first time homebuyers.
We
Is
can do
that
the same.
yeah,
Yeah. And there's some great opportunities there. It's not everybody's birthright to live in a big metropolitan city, and multi-million dollar condos and stuff like that. If I was starting out today, I'd be looking at some of the smaller markets, trying to position myself to do exactly what you just said, like buy the kind of place that you can get a lot of cash flow out of, multi-unit, And there's some great programs for that. I know in the States, you can do what we would call a high ratio loan, where you put a very small down payment and you get a higher ratio of a loan. And I think there's some great opportunities in Canada and some of the smaller markets to do that. There's probably throughout the States as well.
As a provider, I'd be curious as to what you've seen on the mortgage side of things when real estate investors were fix and flipping and doing all that type of stuff. Have you seen anything like trend wise of like, hey, you guys need to be paying more attention to this or that or the other?
Well, there's moments in time which get pretty crazy. So we actually tried to create a product where an investor, could be a homeowner as well, but someone who was trying to be able to negotiate more aggressively on price so they could get a good deal, tighten up the financing cycle, go in with more confidence. And over the last few years, there have been moments where there's been multiple offers and bids on properties and things like that. So it's harder for an investor to find those deals. So we created a product which actually worked really well in the hotter market. We called it Fundable. It allowed someone to basically get completely pre-approved for their financing, like locked in, so that they had a guaranteed mortgage going into the offer so that they could basically write a cash offer. And that there's a variation of that product that still exists today, specifically for investors that are keen on fix and flips. There's a financing group that I know does a lot of this. Their specialty is helping someone acquire a property and finance the build. Generally, they'll work with people that have experience, that they know 6-month timeline, they're going to be able to have that build complete. And I mean, this is your business. You do a lot of this. There's a lot of people that come into that space. They don't know what they're doing. They could be a year or more. They could maybe not estimate correctly. But if you know what you're doing and you can prove to the financing company that you know what you're doing, then you can get favorable terms. They'll often finance the bulk of the deal for you because they know they're going to get a quick turn on the cash because they're working with a pro like yourself. The financing rates are high, but when you can get basically 100% of the deal covered to buy a place, fix it up and flip it, it's the cost of the transaction. So there's products like that that exist up here in Canada and probably in your neck of the woods as well.
You know, one of the things that I think is interesting, you mentioned regarding the marketing aspect of this. One of the bullet points that was sent over was you have a way in which to get 10x engagement in growing their businesses.
Yes, I
So that,
do.
anytime you
Very
see
cool.
10x, I automatically Grant Cardone, the 10x
Yeah,
rule,
yeah,
man. So when you
10X
say 10x, like
you know what? I don't love that he kind of like owns that 10X brand because there's a whole bunch of 10X philosophies that, a lot of people have talked about, just mindset kind of stuff. One of the biggest ones, and I think Grant Cardone spent some time on this as well, but the one that I always loved, just, I know I'm sidebarring here on 10X, but the one that I always loved, and this has helped me, is like if you're here in your business and you're trying to, let's say you do 100 widgets of something and you're like, I want to grow by 20%. Well, the mind kind of goes to, great, well, I have to do 20% more of what I'm doing today. So I've got to be 20% more out networking, 20% more doing deal intake, 20% more processing, whatever that looks like. But if you say, okay, I want to go from 100 units to 1,000 units, your brain has to get into a different place. It has to think about, well, that's not possible. I can't be 10 times, I can't do 10 times more networking. I can't do 10 times more deal intake. So your brain immediately goes to solutions and you start thinking about, well, how would I do that? And so if you really, and then you can work it backwards. And that's where great ideas come from. And that's where all of a sudden you're not thinking about how do I have incremental improvement. You're thinking about how you have this milestone level improvement. Anyway, but yeah, we've got a program and it's really simple. And this is something anybody could do today. So like we run a newsletter business. So we send about 500,000 emails a month on behalf of all our partners to, basically Canadian homeowners about real estate. So we support mortgage brokers, realtors, and financial planners, essentially people in the wealth industry with this. And we run their newsletter for them. But the thing that adds the engagement, and this is the thing anybody can do, is we always include a contest in the newsletter. And because we have so many partners, we are able to have like really cool prizes. So we kind of share prize pooling. So we're able to do like flat screen TVs and large, mortgage prepayment giveaways and vacations and Roomba vacuums, like cool stuff. And so people, when people have a contest in their newsletter, we tend to see double the open rate and double the engagement rate. But then what we do is like, when you look at a normal newsletter, there's open rates and then there's click rates. And a click rate is really just like the percentage of people that click on the link to go and learn more about whatever you're talking about. Usually that takes them to a landing page or some kind of article, but there's no actual action that's happening. That's just the click rate. Because we've got the contest, in order to enter the contest, people have to like answer a question. And so when we talk about an engagement rate, it's really a contest entry rate. And so, but what we do is we ask very strategic questions for our partners. And then their people from their database will answer. You'll be surprised what people will do to like win a TV. They will answer very personal questions. And so you get to interact with your client, and you get to learn about your clients. And so it's a really, really cool thing. So yeah. So it's just adding a contest, doing it right, and having good prizes. You will get really, really good engagement out of your newsletter. And anybody can do that. We do it as a service up here in Canada, but anybody can just easily add a contest to the newsletter.
Is there anything you have to do to the subject line so they know the
Yeah.
contest is in there, or how do you identify that?
Yeah. We'll be like, we always have a high value article. None of the whole like 10 tips to renovating your home this summer kind of stuff. Like we'll focus on strategic content, like how to optimize your cash flow on your rental portfolio, as an example. You know what I mean? So like we try to really give them something of value. So we'll include that value bomb in the subject line. We try to keep it short. And then we also include the name of the high value prize. And so we'll be like, how to get more cash flow out of your portfolio, and, giving away a 80-inch flat screen TV. That'll be the subject line. And so people come to expect that every month your newsletter has a contest, and they look forward to it, and they're always looking for it. We send out about 5 million emails a year. We know that when we add that contest component to the subject line, we get double the open rate and double the engagement rate. And like I said, we get like 40 to 50% open rates and 15 to 20% engagement, not a click. This is 15 to 20% of the list actually responding. If you have 1,000 people in your database, you will have on average somewhere between 80 and 120 actual conversations with your clients with this approach. It's pretty powerful. Works really, really well.
Have you found the sweet spot, like the value of the gift versus the open rate?
Yeah, you can probably really ratchet it up. But if you do like a $25 or $50 or $100 gift card, it's okay. If you do a $1,000 iPad, that's meaningful. Now, what we do, because we have the benefit of pooling, is everybody basically throws $100 in, and then we're giving away prizes of $1,000 to $1,500 value. And so for $1,000 over the course of the year, you get to give away like $15,000 to $20,000 worth of prizes. And so this works when you're pooling. And so that's what makes our thing unique, is it's very, very cost effective. And we pick your prize winners. And then we even have some AI features in there that will make sense of all the answers. Cause we have some people that get 100 or 200 responses. And so it'll surf through it. And based on your industry, it'll be like, hey, here's 3 people that are potential deal opportunities for you right now. So it's pretty cool. So we've got a lot of features around it. If you just wanted to get more engagement out of your newsletter, throw a $50 gift card in there or something like that, and put a contest question in, and you're going to get more responses than you normally do.
So did you typically see more engagement of physical goods? You mentioned an iPad and
Yeah.
Roomba, a
The
few
big
other things
prizes are
versus
what
like,
work. Yeah. The
yeah,
physical prizes.
I've just seen a lot of people trying to give away free training and ebooks and other things.
Okay. So don't do that. I mean, you can do that. Like that's part of a sales funnel. This is just a pure gift for people. This is like, hey, tell me a little bit about yourself. Like we'll answer, well, if it's Halloween, the question will be like, what's your favorite Halloween costume? And then, so we ask, like, we try to mix it up too. We do in a quarter, we'll do like 2 kind of like personal non-salesy questions. And then we'll do 1 kind of business related question. So like one of the questions that's going out right now for us is, I think in March, our question, successful people have a team of advisors around them, like a tax pro, a financial advisor, a real estate broker, a mortgage agent, that kind of thing. Who's missing on your team? Where's the gap for you? What does that do? It allows the client an opportunity to respond and answer the question. But then if I'm a mortgage broker and I get 80 people that respond and say, well, I'm missing a tax pro, I'm missing a financial advisor, I'm missing this, you can now take all those answers. And if you have a good relationship with your list, you can say, hey, I've got a good financial advisor. You want me to introduce you? Like, I've got a good tax pro. You want me to introduce you? And so now you're leveraging the entries to turn around and like now feed your network. And so like the power of this is off the charts. So we don't just provide the service, but we coach people on how to leverage it. So we've always got like at one out of every three is a very strategic question. And we spend some time coaching our partners on how to leverage that question so that they can either, support the client better, feed their network, find deals, that kind of stuff.
Okay.
Yeah. Yeah.
Just to remind everybody, Jason Henneberry, you can find him on most socials under that alias. And I'm going to have that as a clickable link to Instagram in the show notes. If you found some value in what we're talking about so far, share this with one of your investor friends. And if you're watching us on YouTube, give us a quick like and subscribe.
I tell people they'll get a $25 gift card if they like the podcast.
I'm not sure if I'm
not
ready
putting
to
on the
make
hook
that
for that.
investment.
You're going to get a lot of likes, man.
So I would imagine then, based on what you're just saying regarding email lists, let's focus on that for a second.
Yeah.
A lot of people struggle establishing that initial email list and growing that quickly. Do you have any tips on outside of these contests? How can you grow your email list quick?
Oh man, you're singing my song right now. So my big thing right now is email newsletter marketing, email lists. So like the high level on this is your email list, your relationship with your list. That is the one thing that you can control as a small business owner. All the rest of it is good. Like having a podcast is good. It brings eyeballs to you, right, Jack? If you're on social media and you're doing those types of things, great. If you got paid ads, great. If you're doing LinkedIn, awesome. But we know from experience, from past experience, that these things tend to evolve and change. And so they're necessary to bring eyeballs to your business, but they're not the thing that you can own and control. Like Google will just randomly switch up their algorithm, or, TikTok might even just suddenly not be there one day. I mean, we've seen that, right? With your email list, like nobody can take that away from you. It's the one thing that if you do a good job at nurturing it, then, people can come to look forward and expect to receive communication from you, and you can go direct. So everything else in the world should be about growing your list. And then if I'm a small business owner, I am nurturing that list. That is like the most important thing I could possibly do. So what's the fastest way to grow the list? We've got all kinds of things around that, but I would say the tactic that I've seen work the best right now, and this is something that we coach people on and help people with, is helping your partner, like figuring out what kind of content is important to your referral partners. If I'm a mortgage broker and I'm trying to attract more realtors in my world, I know that my realtor partners are very busy, but is there a way for me to write content in a way that it would help the realtor? And then the realtor would then be willing to share it downstream with their clients. So you don't even have to grow your own list. You can actually expand your reach by getting access to your partners' lists. And so everybody in your world may have, 300, 500, 1,000 contacts. And if you do a good job making it all about them and the value that they can bring to their clients, they will actually share your content downstream. And then that gives you exposure. It's not dissimilar to what's happening right now. You and I are having a podcast, and when this is over, I will share the recording with my audience. That'll bring you more reach. And you've got a wonderful audience, and that gets me some exposure. And if we do a good job, the people who are watching get some value out of this. And so it's a win everywhere. So you try to do the same thing with written content. We just launched a newsletter called Breaking Bank, and we focus on financial strategies. We launched it in September. This is only 5 months old. We already have over 200 partners that have plugged in to this newsletter, and a total audience reach of about 150,000 homeowners. And the way we're doing it is we're saying we've got this platform that we built and we're writing the content, but then when a mortgage broker, realtor, financial planner share that article with their audience, they're using their own unique, basically link to the article, and all the advertising around the article rebrands itself to that partner. So we can go out to our realtors, our financial planners, and we can say, hey, we wrote a really cool article. Here's a link, share it with your clients, and then that person will just turn around and send an email out to their list and brings the traffic back to our site. But then they get all the banner ad exposure and we both win. And so that's in a nutshell what we coach people to do. It works so well. to go from like 0 to 150,000 distribution in 5 or 6 months is pretty unheard of in the financial newsletter world. And so that's the kind of power of, like, if you do stuff like that, you really grow your list. So if you can think about not yourself, but downstream one level, what's important to my partner, they will open up their list to you. And that is the fastest way to grow.
Yeah. What a great tip. I think everybody should make note of that. So I would imagine it's kind of surprising that we kind of turned this into a marketing discussion
It
podcast.
is.
I'm going to keep
Sorry about
going
that.
with it because your wealth of information here. I would imagine you've seen a ridiculous amount of bad decisions when it comes to marketing, especially in the real estate world. Like, can you give
Oh,
us
God.
give us some red flags? Don't do this.
Okay. I'll tell you what not to do. Don't do nothing. And that happens so much. And we come across people all the time and they're always like, I don't want to alienate my list. I don't want to burn my relationship with my client list. And so people are afraid to actually email their list. That comes up a lot, a surprising number. I'd say 50% of people or more are afraid to actually email their list because they don't want to offend them or whatever. And then I always point to, like, the best email marketers on the planet are hitting their list every single day. When you think about in your inbox, there's probably some daily newsletters. I don't know what they could be. They could be like TLDRs or Morning Brew or whatever. You look forward to having those and you don't unsubscribe from them for one reason only, is because they deliver good quality content. They're delivering value. And so it's not about how often you hit the list. It's about the value that you bring in that communication. And so, yeah, if you're sending out crap, you're going to get a lot of unsubscribes. But if you're focused on actually adding value and you do a good job at that, there's no limit to how often you can hit your list. And you should be increasing the frequency of your communication with your audience. So that is the biggest mistake I see people is they're afraid to communicate. They're afraid to put themselves out there. And maybe it's because they don't quite know how to add that value. And that's a different thing, but you can learn that. Once you've got that figured out, then yeah, crank it up.
So I'm curious as to your thoughts then around AI and having some of this get auto generated. You said you keep saying adding value,
Yeah.
but
Focus on the pain points. So, and there's no problem using AI. We use AI in all kinds of our processes to streamline our content creation and make it better. You should be doing that. If you're not doing that, you're missing a huge opportunity just from an efficiency standpoint. It used to take us half a day, to sit down and write an article. And now we can get our thoughts about, we still have to have original thought. We can get our thoughts about what it is that we want to write about. And then we can get that content created and refined in under an hour. Good quality piece here. I'm not talking about just asking it to spit something out. When you talk about original content or something that adds value, I would focus on what are the pain points of the moment. And so people are anxious because of inflation. People's incomes aren't going up as fast as it's not keeping pace with the rising cost of living. So cash flow is an issue for people. People feel like they're losing ground financially. They're stressed. These are all things you can write about. And so what we focus on with Breaking Bank is financial strategies that make a difference for people. And then we write the content in a way that it's less about what is a 401k and more about here's a tactic for optimizing your 401k, right? And we don't go deep on it. It's like one piece of information and a quick how-to, something that is digestible in 350 words, where you can have a nice title about do this to get an extra 5% out of your 401k, whatever. So that's just an example. So it's less what is, more how to. And the value add is about it really focused on helping someone. And so if you're focused on improving people's cash flow, helping them qualify for more homes, get the lifestyle that they feel like they deserve without sacrificing in other areas, helping the kids stay in sports, paying for long-term education costs. Like, man, if you're in the financial sector, there are so many goals that people have that they feel like they're not getting there. And then what are the things that you do that can help them, and then really break that down into small parts, and then use AI to make the content flow better. And one trick on AI is if you just spit something into it, like, you throw something in ChatGPT and you're like, write me an article about X, it's going to feel pretty generic. But what you can do is you can train ChatGPT to write in a certain style. So if there's someone that you see out there that writes really well, that you're like, man, I wish I could write that way, go grab 5 or 10 of that person's articles, feed them into ChatGPT, ask ChatGPT to analyze the style. It'll give you a stylization, and then you can save that to the memory and you can say, I want to write in the Jack Haas style. So here's my idea. Here's the research on it. And can you write a 350 word or 500 word article in the Jack Haas style? Boom. It's going to like come out and it's going to sound really good. So but you got to learn to work with it a bit, but you should be using these tools because they make the writing so much more efficient.
Mhm.
Yeah.
These new tools are available to us. The problem I've seen lately is I'm getting email blasts on automation,
Yeah.
and you can tell it's been written by something other than a human, and it becomes like, what value is this actually giving me at this moment?
Yeah. You need to stand out. And so that's why adding the contest piece is really cool because it's very personal. It's like, hey, I'm giving this away. It's me, I'm Jason. I'm giving you flat screen TV this month. Answer to the question. And then what's really important is that you take the time to reply to those answers and you have an exchange. So the Halloween costume one, I always point to because it's like, what's your favorite Halloween costume? Super easy question for people to answer. Like, I'm dressing my kids up as a minion, then you can reply to that and you can be like, oh my God, I created a minion costume for my kid like 10 years ago, which I did. I created this really cool minion costume. It gives you an opportunity to have a personal relationship. And so when they get your next email, they're not thinking this is a robot. There's a real human on the other end who's looking forward to the response and interacting with me. And that's important.
Well, I think a couple highlights here that I wanted to make sure that I want everybody to hear, because, we're talking about marketing, and this is something that people could implement like right now regarding what we've been talking about here so far. You mentioned earlier regarding the contest, for example. This goes back many, many years ago when I was in the banking industry. I was stationed at a table at a bull riding conference in Las Vegas. And the amount of people that would give you their private information, including their social security number, simply for a 2-liter bottle of soda was silly to me. So that's one thing I think I wanted to share.
People love contests. It's great. It's fun to give and it's fun to get the answers and get to know people better.
Well, and then you have a very tailored group. I mean, it's a very niched group, realtors or real estate investors, and you're kind of niching some of this information down to the audience.
Mhm.
I think we were going to be giving away a meeting with one of the pro bull riders or something, a private behind the scenes thing. So
Yeah.
those people are very excited about that activity that they're at. I mean, it's very niche forward on that front. But you mentioned, if you're asking 3 questions, then having one that's strategic. I think
Yeah.
that's really interesting, that give and take relationship there. And then you also mentioned your newsletters are about 350 words. So that sounds like a lot, but that's actually pretty brief.
Pretty
You're kind
brief.
of
Yeah.
350, 500 words, and a chunk of that is the contest. And then you're giving them like a strategic, here's your one tip, in and out. They find some quick value. Would
Yeah.
that be fair to say?
And we focus on the contest first. A lot of people are like, man, I really want to, it's got to be about me. It's my newsletter. It's about what I'm doing, what I'm telling them. Just drop all that. Like, it's not about you. It's about the person receiving the newsletter. Right. So they open the thing, they're looking for the contest. So we always lead with like, boom, here's what I'm giving away. Here's here's the button, like enter the contest. And here's my newsletter. And then way further down, it's like, here's how you contact me because they know who you are. They're on your list. So it's not about the amazing things that you do for them at all. It's just like, here's how you enter, and then they can read the article. So that goes second.
Well, Jason, this has been fantastic. You brought a lot of value in the marketing world. What's crazy is that your bigger business is mortgage,
Mhm.
and you mentioned 500 team members or something at this point.
That's right.
I know we probably should have another podcast regarding this, because I would love to ask you some questions regarding the struggles and that you experience when scaling, how you're hiring all these people, how you're dealing with a lot of this stuff. But I would have to say that if you want that type of information, you're likely going to have to follow Jason. So head over and find him at all of the socials, Jason Henneberry, Jason Henneberry. And Instagram is going to be a great place for you. I'm going to have that as a clickable link in the show notes.
Sure.
But before we close out this episode, is there anything we should have tried to cover here today?
We laughed earlier before we started the recording about how many times entrepreneurs fail before they find that success and stuff like that. And there's certainly been a lot of those along the way. So if anybody's just starting out or you're in your journey and you're having a rough go, just keep putting one foot in front of the other. Believe in yourself and you'll get through whatever it is you're going through. I've certainly been there. I know, Jack, you have too, and most entrepreneurs have. So yeah, we can get into that another time, Jack. There's been some bumps in the road. And I hope that, if anybody's listening and they're currently in that space, it's a tough space to be and it's a tough market right now, but there is another side you can get to. So just keep plugging away.
Well, I appreciate that. Jason, if you're ready, we'll jump into the rapid fire and close out this episode.
Oh, sure. Yeah. I didn't check out the questions. So this was going to truly be off the cuff. Let's do it. Okay.
What is one lie real estate investors often tell themselves?
I don't know about a lie, but I think that there is, when you're first getting started in real estate, you have high aspirations and that's great. And you're excited, but sometimes the due diligence isn't quite there. So really look at what is the worst case scenario in terms of like, maybe the tenant stops paying the rent. Maybe you've got, whatever it is, and really look at what are the things that can go wrong and being properly resourced in the event that those things happen. I think a lot of people go in thinking like, oh, this is great. I'll buy the place. It'll be tenanted. They don't take into consideration all of the other things like maintenance and other stuff that will come up. And that's where you can get into trouble. So when you're a seasoned investor, as you know, Jack, you're like, this is great, but what if the cash flow is only here? Or, you know what I mean? And you start to take a look at investments with a more discerning eye. And I think that would probably be helpful for people when they're first getting in.
If you could go back in time and give your younger self a piece of advice, what would it be?
Trust in the process, believe in yourself. You can work through it. Whatever opportunity you think is kind of like a once in a lifetime thing that you've got to jump on right now, probably it'll come around again. It's not the last time you're going to see that kind of opportunity. So take your time with the decision. Don't rush.
Do you have a book recommendation?
Oh, you can buy my book, Jack. No, I don't have a book. So my favorite book, business book, is the Jack Collins series, the Good to Great series. There's just so much in there.
I got
There's
it
books like,
just right over my shoulder.
is it over your shoulders? Yeah. So, there's a really good philosophy somewhere in there. And I can't remember which book it's in, but it's kind of like protect the core and then expand from the core sort of thing. And I'm not doing it justice right now, but I sort of take it like protect the core, try new things. And so we talked earlier about like, yeah, I've got a few different businesses that work. I've tried a whole bunch of stuff. Like I've got 3 or 4 things that are working really well now, but over the last 20 years, I've probably experimented with 20 or 25 different projects. So most have failed. But what I learned along the way, be patient, is I kind of blew myself up in the first market correction, 2008 to 2011. I had a really rough go and I kind of had to reset and start over. It's because I was just a little bit overexposed in different aspects. I had too many things on the go and not enough buffer in the system. I learned from that. And that is, you always want to make sure your core engine, whatever it is, the thing that feeds you, your bread and butter, that you don't mess it up. And then it's once you've got that really stable, then you can try some other stuff. Maybe it's a marketing program. Maybe you got a couple of marketing ideas. Maybe you've got a product that is like vertically integrated that you want to expand into, whatever, but try those things and maybe have 2 or 3 projects on the go and then find the one that really works well. And then find a way to like incorporate it, like expand the core. So like bring it into the core, make it really stable. That's your new base of revenue. And then you can test some new stuff. So just don't do anything outside of the core that if it failed, it would like you would have to like start over. Try to always like not have to start over. And so don't be afraid of failure, but don't put the core at risk. And that's a very big theme in the Jim Collins book.
Well, I just have had that big of an impression on you that you're going to call him that.
It's Jack everything now.
And then finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
I really focus on doing the job first, and then I quickly operationalize the role, any kind of new thing that we do. The faster you can get out of your own way, the better. Is like, I'm willing to pay for good quality support around me so that I don't ever have to go back. So you can just find good people, and support them and put them in the role that you need support from. And then that way you can continue to free yourself up emotionally, mentally, so that you can focus on the next thing or think strategically about the business. I think a lot of small business, like solo entrepreneurs, really get stuck in this. They try to find support and then they try to like pay as little as possible for that support. And then they end up like having to babysit the support. It just feels like they're always kind of stuck. Don't do that. Idea. Map out your business in a way that you can afford a really good quality person that can earn a good living off of that role. And then find that good quality person, support them, incentivize them to do that job well. And that will free up your time so you can go do the next thing. And that has been really important for me. And it's allowed me to do all the things that I do.
Sure.
Yeah.
But that's something a recurring thing that you've brought up here today. Did you find it difficult to let go of some of these things or actually see these individuals as an investment versus an expense?
I like to joke that I had like 5 first assistants, meaning that like, I tried the way I just explained, don't do that. Like I've done that. I've tried to do that. And then you bring on an assistant and you're like, you think you can do it better than them. And so you end up just getting in there and doing it. It just slows you down. So it took me many years and many very difficult experiences to learn that it was way better to get out of my own way. Maybe that's the entrepreneur's journey. Maybe you have to experience that a bit, but the quicker you can figure that out, the better.
One last time, Jason Henneberry, and you can find him on all of the socials, but really appreciate your time. This was great, and I really value what you brought to the show today.
Thanks for having me, man. It was a good conversation. Appreciate it.